Hey, Rex Bear Leak Project. How the heck are you? Beautiful day today out here in Southern Colorado. We have a fan favorite, personal friend of mine, Collin Plume. Today we're going to talk about global conflict. Is this a perfect storm for precious metals? Wars, rumors of wars, talks of the stock market collapsing. The US dollar devaluation actually just dropped about 10% recently. Tariff wars, tensions with China, Russia, Iran, North Korea, conflicts in Pakistan, India, more recently, Cambodia and Thailand. The world's divided, even here at home. I have never seen so many people, even local communities, so split over the present and the future. Here's some good news, though. Platinum surges, gold crushes the stock market over 20 years, and silver is on a perfect storm. Today's guest, Collin Plume. Let's talk about it. Collin Plume has created and looked after wealth for his clients and advises them on strategy and management of their assets. Over 15 years experience in property insurance, commercial real estate, and precious metals investments. He's well-versed in finance and economics. It was while providing insurance for industrial properties, he realized the value of monetary protection for his clients. He helped investors guard their wealth during the last recession, aligning clients' interests in retail shopping centers from California to the American heartland by making sure they averted financial ruin. After an extensive research on recession and its effects for clients, he joined a precious metals firm and soon rose to be one of the top brokers in the U.S. with over 28 million in sales in 1 year. Collin lives in the San Fernando Valley with his wife and kids. And congratulations to Noble Gold Investments for recently being picked by Consumer Affairs, the rating agency, as the overall #1 gold IRA company in the U.S. Now, today, if you convert your 401 or IRA through Noble Gold Investments, you will be gifted 2 5-ounce America the Beautiful solid silver coins to add to your collection. Give them a call, 877-646-5347, and check out noblegoldinvestments.com. Collin, great to see you, man. Thanks for the opportunity. How are you doing?
Yeah, Rex, good to be on. I got to get you a new bio because I actually realized that I've been in precious metals for almost 16 years. And then I had another career in commercial real estate and insurance. So I guess I've lived a few lives. I was just thinking about that. It's been interesting ride to be on the commercial side and precious metals and also in real estate. I think it's given me a unique perspective of diversification and ideas of where things are today and where I think things are going to go in the future. But yeah, it's a unique time in our history, just in terms of monetary history, that, our dollar today down, 10% from, and when they say the dollar's down 10%, what they mean is that it's relative to other fiat currencies. So they're all losing value, but the dollar has lost more value relative to the euro. And if you take a basket of currencies, it's down a little bit more than some of the other ones. And, the dollar being down doesn't necessarily mean that gold's going to go up. Everybody thinks that's the case. It does happen that way sometimes, but gold is up 25% this year to date. So, but it's not necessarily the correlation between the dollar going down. It could be part of it, but it's not the whole story as to why gold has gone up and why the dollar has lost pretty significant value this year.
I've heard from several people, and I want to get your take on this because you would know better than they would, that when the dollar goes down, the US dollar, it's actually good for gold and silver and precious metals.
It could, yeah, and it's good for trade too,
Okay.
right? I mean, the dollar going down is good for us trading overseas, which we need right now, obviously with this, tariff war that we've been in. And when I think of the tariff war, it reminds me a little bit of my kids, and that what President Trump is actually trying to do is just trying to make it fair. He's just trying to make it even, which is someone that has 3 kids. That's my constant battle every day with my kids, is how do I make everything as fair as possible between the 3 kids. And so I think that that's what he's really trying to do, but it's caused a lot of turmoil. It's caused a lot of anxiety with business owners. And so I think that's why you've seen the dollar, part of the reason you see the dollar lose value. There's a little bit more distrust in our currency right now. And investors have moved away from the dollar. And a big reason they're buying, a lot of it is they're buying gold. They've just replaced the dollar and U.S. Treasuries with gold. Gold is kind of broke out in terms of the norms that I heard for many years in the business, that it's just a insurance play, safety play, which in some times of the year, sometimes it is. But if you look at, an interesting thing, Market Watch came out with this, so it's not coming from me, but basically if you go back the last 20 years, and everybody's like, the S&P has done great. The S&P is up 421%. Gold's up 616% over that same time period. So an asset that I would say is typically regarded as a safety play has actually performed, really well. So I think that the idea that it was just to protect other assets and it's not going to have a phenomenal return, I think that story has sort of shifted pretty dramatically over the last few years. And I think that's something that people need to keep in mind, is that it's not just, you're not just buying it to protect against other things. It can actually perform really well. And it has performed really well for a lot of our clients.
Well, not only gold has performed really well, but platinum seems to be on a tear right now. I just found an article about platinum, and I was wondering if you could tell us more about it. The article is Precious Metals Explosion. Platinum surges 28% in strongest monthly gain in decades. And this is from oilprice.com.
Yeah, 28% in 1 month.
Wow.
In June. Yeah.
Wow.
I think, you're looking at, platinum's up 28% in that month. It's up over 40% for the year, because platinum was sitting at about $930. We're sitting in the $1,300 range today. So it's up close to 40% for the year, which is phenomenal. The nice thing about platinum, I think, that you can always hang your hat on as an investor, is that it's difficult to mine, which is good as an investor. It's used in industry. There's not that many, from a coin and bar point of view, from like the stuff that we do, this is silver, but there's not a lot of coins and bars in platinum. It's actually one of those metals that they don't make a lot. There's not that many places that even mine it for this or mint it for coins. So I do think it's a good one to own. And, I think that we still have a lot of room at the $1,300 price. I don't think we're near the end of the bull run, because platinum really hasn't moved in many years. And so one thing that visually, for someone that wants to think about platinum, if there's enough gold in the whole world to fit in 2.5 Olympic size swimming pools, if you thought of that same scenario and you're in that pool, the platinum in the world would only touch your feet. That's how little platinum there is above ground. So you have 2.5 Olympic size swimming pools of gold. The platinum would only touch your feet in those pools. So it's a small amount that's out there. Now, it's used in less things than silver. It's used in less things than gold. But as we know, things change and the future changes. I mean, when the Hunt brothers tried to corner the silver market in 1983, they had no idea that silver would be used in everything technology that we need. They didn't know about solar panels. They didn't know about any of this stuff that silver would dominate. So I would say that I think it's a metal that people should look out for. I think they should definitely have some in their portfolio. And I definitely think you should get it in coin or bar form, just because there's so little of it in that form already. And if you look at it, if you dive into it, and we have a platinum guide that we wrote, we met with the Platinum World Council last year. We wrote a guide based on our experience, and we can send that to investors if they call us. We have many guides, but we have one on platinum. The one thing that they talk about a lot is that most of the platinum in the world is mined in South Africa, and they say that platinum has not been profitable for them for many years. So a lot of platinum mines have closed. Even at the $1,300 price, the mines are some of them are just going to break even. So as you know, as an investor and business owner, you're not going to continue to add resources if you can't be profitable, right? So platinum mining in South Africa has waned; it's dropped, and even at the $1,300 price, they still think it's a break-even proposal, which means there's going to be less miners. I think that's a good thing going forward. I think that's going to be a positive. Anytime you can get a metal that is expensive to mine, that they need. They use it in catalytic converters. I think it's something that people should look out for.
Well, and also, I mean, I remember growing up as a kid. I'm Gen X. I remember when platinum was more than gold.
Correct. Absolutely.
And if there's less of it, it's harder to mine, and it's a desirable metal.
Right.
My mind's going, wow, this seems like a great opportunity. I've got platinum, and I think I might get more, actually, especially hearing all of that. I had no idea there was so little platinum compared to gold, and there's not really a whole lot of gold either. If you think about how many thousands of years.
There's not really a whole lot of gold. Yeah. Yeah. So I think that's exciting. Commodities in general are really exciting right now. And if you think about what's going to happen, Rex, I think, this year, the Fed and Powell have, Fed and Trump have really been pushing against each other. They've been talking about, doing a rate reduction. If you go to Polymart or Polymarket, which you can bet on a million different things. One of the things is that they show like what's the likelihood of a rate decrease this year, and it's moved up significantly. They say there's like almost a 70% chance that we see a rate decrease in September. The Fed's meeting tomorrow too. I don't know if they're going to reduce rates. I think they're going to hint that they're going to reduce rates in September, which I think you'll see a movement in the market based on the Fed talking tomorrow, because usually they hint and then they do it. So I think that rates are going to drop, and with rates dropping, that's going to be a signal that the experiment of keeping rates high isn't really working. We need to lower rates to stimulate, because the Fed really, if you think about it, doesn't really want to lower rates. They want to keep it where it's at. They want to hold off heavy inflation as long as they can. The Fed has two mandates. They want to keep inflation at 2%, and they have to look at employment. And I think that employment's been pretty good. And so they don't want to lower rates unless they have to, but there's this big push for them to lower rates. I think when you look at anytime you lower rates, they typically do it in bunches. So I think they're going to do it in September, and then they're going to do it again maybe before Powell's out of office in February. And then I think whoever he puts in office is going to be aggressive and lower rates. That's going to be great for anything that's got a limited supply. It's going to put a lot of money out in the market, but it's basically going to send a signal that we need to get liquidity out there. We got to, everything's built on debt. And so I look for, September to be sort of a signal to the market that, this idea of keeping rates high hasn't worked. We got to get the money flowing again. We got to get more debt out there, which, long-term is not great for anybody. I mean, it just, we're $37 trillion in debt. It's not a good thing. But that's what I think they're going to do. So I think it's going to be good for metals. So I think we're on a good horizon for a lot of the metals. Gold's been moving a little sideways since its massive uptick this year. It's been kind of moving in this direction, but I think people should be prepared for a continued bull run in the commodities.
Okay. And I wanted to go over a couple articles that I think are very telling. So in April of 2025, China's holdings of U.S. Treasuries, government bonds, dropped to their lowest level since 2009.
Correct.
And This is continuing a long-term trend for China, reducing its reliance on the U.S. debt and diversifying their foreign reserves. How do you see this affecting the precious metals market? And to add to that, there was an article that just came out on Market Watch. Gold's great paradigm shift: yellow metal crushes stock market over 20 years.
Yeah. Well, I think the shift of central banks moving away from U.S. Treasuries has been going on for the past 10 years. They're looking for better returns. That's why they've been buying gold for 4 years in a row, over 1,000 tons. I think they're going to continue to buy gold. China has been really interesting. I mean, China earlier this year told insurance companies that it's okay for them to buy gold. That's a very telling sign. If China tells corporations in China that they can buy gold as an asset, similar to what we did here in the US, that gold is now a tier 1 asset. But the thing that makes it interesting is they told insurance companies it's okay to buy gold at $3,000 gold. So why would a country like China tell insurance companies to buy gold to back up their assets at almost nearly the highest point of gold we've ever seen? They must know that the price is going to continue to go because they feel comfortable to let their insurance companies buy gold. So that's one telling sign I think that people should kind of focus on. The other thing that you got to really think about is U.S. Treasuries. The one thing that came out is they had this Genius Act that came out a few weeks ago. The thing that it's a funny bill because it's so simple. I don't know why it's called the Genius Act, but the thing that's important to keep in mind is that, yes, the idea was to make stablecoins safer, that they're backed 1-to-1, right? That's kind of the gist of it. But really, the point of the bill for our government is that they want you to back it with dollars or U.S. Treasuries. So I actually think the only reason they're doing this, the only reason that they're focused on crypto is they realize that people move in and out of crypto consistently. If they can move from Bitcoin or whatever crypto XRP into a stable coin, and that stable coin has to be backed by US Treasuries, we give ourselves a new buyer of US Treasuries, which we need. That's been the biggest issue. Central banks are not buying US Treasuries. That's the biggest, I think more than anything in our economy right now, that's the biggest problem that we have. If that continues, then we can't continue to just do all this debt if there's no buyers. The buyers right now are the retail buyers. The retail buyers are more finicky than central banks. And so you have this, retail buyer that, wants a secure asset. They want a great return. So I think that's the biggest bubble really is if we, and Ray Dalio talks a lot about this too, is that he thinks that's the reason that he's really concerned about the reset is that if we can't have continuous buyers of our debt, then the music stops. And when the music stops, then what happens? Then it's like, okay, we owe all this debt and the world's going to say, pay up. Well, we can't pay up. We have a negative return on what we're bringing in. We bring in about $5 trillion as a government. We're spending about $7 trillion. So we actually can't, if the music stops, we're dead. There's nothing we can do as a country. So these are the things that realize, and that's why, our systems in general, they don't want you to think about what could happen if the music stops and what would happen day to day. We got a glimpse of it in 2008 with the credit. We saw that happen where you kind of saw like, whoa, wait, what's happening here? If the credit, and they had to basically bail them out because if credit stops, the world stops. I mean, and that's what would happen. And so when the world stops and they call in debts, it's like you have all these creditors of our debt. What are they going to ask for? They're going to ask for real estate. They're going to ask for assets. They're going to ask for anything that they can get their hands on that has value. They're going to ask for our gold, right? I mean, that's pretty telling. They're going to want something that we have as a country that has value. And in my opinion, the only thing that will have value at that point will be assets. It won't be stocks. It won't be bonds. It'll just be assets. It'll be silver. It'll be gold. So gold and silver and platinum are if the music stops or when the music stops, in my opinion, these are the assets that will protect you from that situation. And that's why this year has been, I think, the most telling year that I've ever been in the business, because you had the European Central Bank basically say, they came out with a report with 4 of their analysts, and it said, if everybody called in their gold contracts, there would be a shortage. They don't have enough. And there's been estimates that it's 100 or 150 to 1 contracts to actual gold. We know in silver, because there's a shortage right now, the contract to silver ratio to actual ounces is 378 to 1. So you have all these people that say they own it and they have the right to it, but they actually don't own it because it's just a contract. So this year has been this telling where you have a central bank telling the world that you shouldn't own a contract of gold. You shouldn't own a contract of silver. They said it. The European Central Bank said it. They had a report. It came out 2 months ago. 4 of their biggest economists. This is a central bank that, in theory, wants to push the euro, their currency, but they're actually pushing physical gold and silver in actual ownership. So I think that's why this year, like, a lot of the norms have been changing for the world. And I think that, is this just the beginning? Is the crack in the armor there? I mean, we can't continue. Could we go $100 trillion in debt? Like, when does it stop? Right now we're paying $1.5 trillion in interest on the 37 trillion that we owe. At what point is it too much? We're not going to be able to cover $5 million in interest payments, $5 trillion in interest payments, $6 trillion. We can't. We won't be able to catch up. So how does it correct itself? And it's either we need to have a significant change in our spending policies, which there's been no indication that that's going to happen anytime soon, or we're going to default on our debt. And when we default, they're going to come asking for assets, real assets. They're going to come in and they're going to want our gold. They're going to want our real estate. They're going to want real tangible things that have value. And I think in that scenario, the world mindset shifts that the only assets that actually have value anymore are things that, like gold and silver, that have intrinsic value. Everything else is just paper.
So if that happens, like, let's go down that scenario for just a minute, and other countries, other nations stop buying the U.S. debt, and the debt bubble continues to grow. We're paying more for inflation, more for debt. Like, do you think the U.S. would actually start giving up land and real estate as a government, or could you potentially see a war possibly? Like, oh, well, we got the biggest, baddest military on the block, so we ain't giving you nothing. But, a couple of F-35s flying over there, dropping a couple of hello opportunities to you.
Yeah, you're right. I mean, that is the other scenario but also the problem is, if we go to war over the fact that, well, I guess what it comes down to, is there any international law that would actually say that we have to, right? If the world, if they have these world courts, and if we own the debt and we just say, well, we'll fight you if you try to take our assets, it's like, well, is there any laws in place that would not allow us to do that? We'd be against international law. I mean, in essence, there's a point where we do owe the debt that we're, and vice versa. If it wasn't us, if it was another country that owed us trillions and trillions of dollars, we'd want to be able to collect too, right? So I think that's a great question. I think you're right. I mean, I think we're getting into kind of a scary scenario where we would have to, as a country, maybe just say, well, screw off. We're gonna go ahead and just continue to have this debt, and it doesn't matter. But then, what's the faith in our dollar? What's the faith in our currency? What's the faith in our systems? And that's the scarier part about this too. At some point, we do have to have some kind of plan to slow down our spending or get our debt out of, in some kind of bubble where we can afford it. I don't think we can continue along this path of just constant debt. So you've seen countries collapse because of debt. I mean, you can go back, thousands of years and you look at, and actually I have a few charts in my book about this, Silver is the New Oil. I go over how, many countries that were dominating ran to the ground because of just overspending. So it's not a scenario that hasn't happened before. We're lucky that we're the world's reserve currency. We're lucky that 25% of the world's trades still happen in the dollar. But as that shrinks, our dominance, really changes over time, and the confidence in our currency really changes. So yeah, I do think there's a scenario where we could have to fight the world to protect ourselves because of the debt that we own. But I also think it would send a terrible message, because we're supposed to be the country that has made the right choices in the world and done some of the right things. And so the idea that we would have to fight to cover our debt, I think would send the dollar in a tailspin also.
Right. And what about like hyperinflation? So if these other nations stop purchasing our debt and they start buying more gold and silver, and then maybe, they start demanding payment, could that create a hyperinflation scenario? I'm thinking of what happened in Germany 80 years ago, approximately 90 years ago, and also what happened in Zimbabwe and what's going on in Argentina and other countries right now with the hyperinflation. It's crazy. My mother-in-law was worried about this. She actually wanted me to get a hold of you guys so that because she had her mother passed, and so she had some money that was given to her from her mom when she passed, and she wanted to put it into metals versus just keeping it in the bank because she was concerned. And this was just recently.
Yeah, I mean, hyperinflation is a real concern. I think that's why the Fed is trying to hold off on lowering rates. I mean, I think, and I get it, because they want to make sure that the economy is going strong, and they do know that these high rates will continue to decimate the real estate market. But maybe the real estate market's overvalued. Maybe that's okay. Yeah, I mean, the debt spiral that we've gotten into is a very difficult situation. I mean, our GDP, 2 to 3% growth a year. For us to really get out of this, we need to see GDP 5, 6, 7, 8%, with an increase in tax or tariff revenue to kind of get us a little bit more solvent at some point, where we're not, having a $2 trillion deficit every year. Ray Dalio came out and talked a lot about this. And, another thing that I've never seen is someone like him say that you should have 10 or 15% of your holdings in gold. Usually someone like him doesn't usually give a percentage, but he said, absolutely, right now in this world, 10 to 15% in gold and some in Bitcoin, to protect yourself against, inflation and debt and all the thing that's happening out there makes a lot of sense. So I think we're, our fiscal policy or political situation, we're kind of in a no-win unless we can come to grips with an idea that we can reduce the amount that we're spending. And that would take a lot of different parties. I mean, this most recent tax bill has significant spending for the military. Some significant. There's even $10 or $15 billion for nuclear weapon deterrence, which whatever that is. I don't even know what nuclear weapon deterrence is. I thought having the most nuclear weapons was the deterrence.
Right.
But so yeah, so I think, not to like, and I've gone down the rabbit hole only because I feel like I have to at this point when I'm talking to people, is that I do think there's a significant possibility that we could default now. I've always hinted around it, but I do think there is a likelihood that we could. And the only way that we don't is if we cut spending. If we don't cut spending in the next 2 to 3 years, then I would say in 5 to 7 years, then a default will happen. And I think when that happens, I think that the world will come after our assets, and they'll come after our gold, and our gold and silver will be worth substantially more. And I've even seen estimates of gold hitting $20,000 or $30,000 an ounce. I think silver in that scenario, $500-$600 an ounce easily, because the world will just realize that so many things that we think are valuable are not valuable. And so once that happens, then there'll be true valuations of things. And then once you have true valuations, I think gold and silver will do fantastic in that scenario. Now, unfortunately, the world will be in a terrible place. But at least as an investor, you'll be protected.
Well, and also in finishing up, I know that you're really busy, so I just wanted to get as many questions in as quick as possible here. I just found another article titled "Silver's Perfect Storm." Expert reveals only 600 million ounces available in tight commercial markets. So I've been, I'm a total silver tard, man. I love silver, love precious metals. I've gold, silver, platinum, palladium, but silver's just been something that I've been waiting to just blow up. And it seems like the past 6 months, it's been doing a really good job. It's been on a tear. And what do you think about the next 6 months, the next couple of years with silver? Do you see a lot of upside still?
Yeah.
On the silver side? Okay.
Yeah. I mean, that article is basically saying there's only like 600 million ounces to be used in industry. The rest is it's already been for investors allocated, ETF backing, whatever, all the other stuff, just holders. There's 147 million ounce shortage this year of silver. We've had a 5-year shortage of silver. And, when people say like, well, what do they do if there's a shortage? Like, governments just pay more. Like if the US government needs silver, they're just going to pay whatever the market is, because they need it for drones. They need it for, missiles. They need it. They have to have it. So they're going to pay whatever it takes. So I think that the writing is on the wall for silver, and people ask me my projections, and, in my book, I talk about, I have a projection. The book came out in December of last year. My projection for silver is to hit $56 an ounce within 2 years of the book coming out. And I think we're on our way. I think if you look at the cup and handle 50-year chart of silver, we're in the handle part right now. And the breaking point for silver is $40 an ounce. If it breaks through 40 and it holds above there and the cup doesn't spill, then I think then you're off to, 56, 57, 58, breaks through all-time high. I don't think there's anything slowing it down at that point. And you'll see some manipulation in silver. There's always been manipulation. There'll be, you'll see like it hit 50 and then it'll drop $3 because there'll be a big sell-off and profit taking, and there'll be some short sellers that will try to push the price down. But that cup and handle, that 50-year chart is pretty telling, and it's usually pretty consistent, and it tips right at $40 an ounce, and we're at $38 today, 38 and some change.
Well, okay, so we go back, we've been doing podcasts now for, I think, 7 years, right around 7 years. And folks, if you go back and you listen to our podcasts and you listen to what Collin says and his projections, he's pretty spot on. So listen to Collin. He knows his stuff. Now, there's obviously never any guarantees, but you look at what the money funders are doing and you listen to the pros and you listen to the experts. And Collin, you know more than just about anybody when it comes to the precious metals, the markets, because you're in it. And so And finishing, when someone calls you and says, hey, I want to convert my 401, I want to convert my IRA, I want to purchase some precious metals. What makes you guys different? Like they can actually own the metals, right? It's not just a piece of paper.
Correct. Yeah. So it's not a fund. First, it's you're buying, the physical metal, bars, coins. We do all the heavy lifting, all the paperwork for you. I think the biggest thing is we focus on bullion, coins, and bars, and we give you incredible pricing because we buy in bulk. Since I've owned Noble, I've been in the business 16 years. I've owned Noble Gold for almost 10 years. We started almost 10 years ago. We've done $2.5 billion in bullion coin sales and bars. So we get good pricing. We pass that savings on to you. The other thing is the service. I think that when you buy something like this, you want to be able to call somebody after. Most of the reviews you read about our competitors is that it's very transactional, that once they've done the purchase, they can't call the same person back, that they don't pick up the phone, that they don't return my call. You're not going to read any of those reviews with us. We call people back. We pick up the phone. We're around. My team this is what we live and breathe and eat all day. So you're going to get an actual person that owns a lot of physical metals, that owns, bars and coins. This is what they do. This is what they believe in. So you're not getting someone that's doing 10 different things. This is all we do. So I think getting an expert about what you're going to buy and potentially sell is really important. And I think just overall that human touch, we really focus on that. I know things are moving away from humans everywhere, but we're not. And so we're focused on that. And so that's really the difference with Noble Gold is that you're going to talk to a real person. You're going to like that person. And, I think that's the element that puts us in a different category from most of our competitors.
Absolutely. And I know from experience, I have friends and family that have converted with you guys as well. They're super happy. I just got an email last week from somebody that converted. They're
Good.
super happy. I pinned a comment. Somebody actually left a comment in our last video that said how happy they are with you guys. And they said you guys are actually pretty funny. So I pinned that comment in the video. But anyway, yeah. So I just wanted to show people when you convert qualifying 401 or IRA through Noble Gold, you will get 2 of these 5-ounce America the Beautiful silver coins to add to your collection. Let them know Rex from Leak Project sent you, and also ask about Silver is the New Oil. Collin Plume is the author of that book. It's an incredible read. It's a quick read, very knowledgeable. And So
and also in the book, I have a chapter at the end that talks about platinum specifically. And I also have a chapter that talks about real estate, which I have experience into. I own a tremendous amount of commercial real estate, and I give some tips in there too. So anyone that's looking to dive deeper into what we're talking about today about silver, wants to learn about platinum, about real estate, I give you little snippets into what I'm doing. And I do all the same things that I talk to people about. I own gold and silver, I own real estate, I own assets. And I believe that owning assets is the only way that you can protect yourself in this new economy.
Well, man, I appreciate your time. I hope you have a beautiful day out there in Southern California.
Thank you, Rex.
Thank you very much. Talk to you later, Collin. Thanks, everybody.